Welcome to This Week in Money. I'm Jim Goddard. Today, energy expert Byron King on what Mideast conflict could do to the price of oil. Financial planner Richard Knowles tells us where to put your money during troubled times. And the Morgan Report senior analyst David Smith tells us how gold is reacting to the Syrian crisis. We'll talk to Byron King right after this.
The best of the best. Randy Elvis Frisky and his Las Vegas show band with Cassandra Frisky. September 14th at the Sagebrush Theater. Tickets at Kamloops Live box office. Call 374-LIVE. Details at RandyElvisFrisky.com.
Welcome to This Week in Money, the source for market opinions. Sitting in for Phil Mackesy, here is Jim Goddard.
My guest is Byron King, editor of 3 financial newsletters sponsored by Agora Financial, and you can find them on the net at agorafinancial.com. Welcome to the show, Byron.
Hello, it's good to be with you.
Well, today we're so interested in what's going on in the Middle East with both Egypt and Syria and what that could do to energy prices. Already we're seeing oil at a 2-year high. Is that going to change, or will it go higher?
Oh, no, it's here, and it could go lower. It could very easily go higher. The issue has to do with, what the headline news, the Syria issue, the riots in Egypt and things like that. But it's more of the idea that a lot of established relationships in the Middle East are breaking down. Things and countries, in fact, entire countries that were established in the days of the end of World War I, when the Ottoman Empire fell apart, along with other empires in the world. When the Ottoman Empire fell apart, Britain and France redrew the map of the Middle East with no real regard for the people, for the tribes, for the history, the cultures, things like that. And those lines on the map have been the way they are for almost a century. Those lines are starting to break down. I mean, that we may or may not see entire nations sort of break up the way Yugoslavia did in the 1980s and 1990s, but that's one of the big things that's upsetting the energy markets right now. It's that sense of uncertainty that a place where a third of the world's oil comes from is in such turmoil.
I think, most people take a look at where oil comes from and they're saying, why are we so concerned about Egypt and Syria? They're not major players in the oil market. But is it because the problems there can spill over very easily?
Right, exactly. You hit the nail there. Egypt is a net oil importer, and Syria is a small exporter when it's producing. So no, in terms of quantities or volumes of oil, these guys aren't big players. But Egypt is the largest country in the Arab world, certainly in terms of population. It's also very large geographically. If just look at the map. And Syria is at this crossroads right next to Israel, just next to Turkey, which is a NATO ally, next to Iraq, which has had quite a bit of history in the last 10 years alone. So sure, these kinds of problems can spill over, and the ideas that create these kind of problems of fighting within Islam and the issue of who's going to be the leader within the Arab world and the Islamic world. These kind of problems spill over very easily, yeah.
And we see the Arab League condemn the alleged chemical weapon attacks against civilians in Syria. And again, that would cause a huge rift where natural allies are now ready to pounce on each other, or at least denounce each other.
It's interesting how quickly that condemnation came out. If you follow the Arab League for any period of time, if you watch them over any period of years, it would be difficult to get the Arab League to agree on the weather report outside the front door of wherever they're meeting, let alone for them to come up with a very quick sort of agreement or condemnation of these so-called chemical weapon attacks in Syria. And we do not know. We on the outside certainly do not know, other than the flimsiest of media reports, or virtually no technical reports, hard science, the forensic science behind it. We don't know what happened. When you start connecting dots, things are very, very odd over there. It's almost like the outside world is being played for a sucker by somebody or some organization, some group in there that wants to somehow, stir up the hornet's nest, kick over the hornet's nest.
Well, speak about kicking over the hornet's nest. All these suggestions that they might use cruise missile strikes to retaliate for these alleged chemical weapons. On the other hand, though, you're a former Navy man. If you put a bunch of bombs or missiles on top of chemical weapons, that's just going to spray them all over the place. How do you retaliate against a weapon like that?
Well, you're raising all manner of important points there. First of all, a country with chemical weapons would tend to view those weapons as a highly strategic, supreme sort of weapon, almost like nuclear weapons. I mean, you would never sort of tell the whole world where these things are. So, first of all, my question to anybody is, are you sure they have chemical weapons, and are you sure you know where they are? Because, I don't believe that we really know what they have, and I don't believe that we really know where they are. So the idea that you're going to somehow bomb them, right away, just the whole idea of targeting, is compounded. Are you going to use cruise missiles? Well, that's a whole other issue. I mean, the idea that the U.S. and or NATO or some other coalition is going to start firing, these sort of intercontinental range type missiles at some other country. I mean that really is an act of war. Are you sure that you want to do this? Are you sure that you have legal authority to do these kind of things? When you get down to actually bombing chemical weapons, you raise the point. You bomb them. You're not going to destroy them. You're going to spread them. So I just think that the whole scenario it verges on insanity. It verges on a fantastical sort of story with a fantastical sort of drama play that's being presented to the whole world. I just don't believe these reports. I mean, we are being sucker punched by people who are playing the news, manipulating the news, and giving us a certain story that they want us to hear for whatever their ulterior motives are.
Would they be people in the oil industry, or are they just as scared as everybody else?
Well, I think people in the oil industry enjoy being in the oil industry. I've worked in the Navy industry, and I've worked in the oil industry in my life. I assure you, oil people are good at oil. Navy people are good at Navy. There's not a lot of cross-pollination there. I suppose in the sense that if somebody wants to see $150 oil, sure, starting a big war in the Middle East and bidding up the price would be good. But I don't really think that the people, plotting that are the oil people. They might be the political people. They might be the plotters and schemers, and evil hatchers of the world. But I'm not about to say that, somehow or another there's some embodiment of some oil industry somewhere that wants to see this happen. I mean, that's kind of, that's kind of slanderous, really, just to say that.
Who would benefit if they started shooting?
If they started shooting, I mean, who would benefit? Well, the people who are losing the war in Syria would probably benefit if somehow or another, the Western powers came in and, took out the Assad government. I mean, but which gets back into, like, why would the Assad government, the people that run Syria, why would they use chemical weapons against people and in a sense invite the wrath of the West into their country to try to somehow punish them? If you're the Syrian government, you're fighting a hard civil war right now, but you're winning. So why would you do something that would change the game to such a point that you might not be winning anymore and you might start losing? There are people who want to somehow sucker the United States into a fight, and would it be Al Qaeda? Would it be someone? We could write a whole series of thrillers over this, but as it is right now, I don't think we know enough, and I think that what we do know is mostly a sack and pack of lies and half truths, and it will be very interesting, to learn more about this as time goes on. But I'm not about to point the finger at anybody right now, although there are lots of people who might be part of the usual suspects. They might be nasty people, but I just don't think they're that stupid. So again, it's very, very hard to say. I mean, it's a combination of true evil and true stupidity of what's going on here. But whatever it is, it's not the image and it's not the impression that we see.
And I understand, too, the rebels, it's not just a popular uprising. They have Hamas, Al-Qaeda, other terrorist groups all massed in with these ordinary folks trying to get a democratic government. So if you give them a victory, you might be giving a victory to the very people who control terrorism or promote it.
Oh, sure. You've got Chechen rebels from Chechnya fighting there. You've got all sorts of highly motivated jihadists from all over the Middle East. You've got people from every different sect of Islam fighting there. Within Syria, you've got Christians who are fighting for their lives. I mean, one Islamic side or the other Islamic side prevails, depending on what happens. They're going to turn around. We could see an anti-Christian type of pogrom, so to speak, in Syria. I mean, we've already seen a little bit of that in Egypt in the last 2 months. I think they've burnt out 50 or 60 different Coptic Christian churches. I mean, here's Egypt, where 10% of the population is Coptic Christian. It's been that way for 1800 years, basically, since the 3rd or 4th century. It's a religion under siege in Egypt. Now it'll be the same thing in Syria. So yeah, you've got different sects of Islam fighting, and you've got some Christians in there caught in the middle, truly in the lion's den.
And I guess because of this tension in Syria and Egypt, usually after Labor Day, we see gasoline prices go down. It's the end of the so-called driving season, but I have a feeling this is going to drive oil prices, if not higher, at least keep them high.
Well, the oil prices, that you see posted for West Texas Intermediate in North America and for Brent crude, which is really kind of drives the price for the global oil industry, those prices are up $15 to $20 a barrel in the last month or so. That's pretty much a war premium, a war scare premium. Now, let's make life easy. Let's make the math easy. Let's say they're up $20 a barrel. Let's just use that number. And every day the world uses, let's say, 100 million barrels. I'm doing this just to make the math easy. 100 million barrels a day times 20 extra dollars is $2 billion a day of extra money that world consumers are about to pay for oil, when this all flows through the system. And you're seeing higher prices now in the futures market, in the New York trading pits. There's a commodity called RBOB, which is reformulated something oxygenated blend or something for it's what they make gasoline out of. That's up 5% just in the last week. I mean, this is all going to trickle down to the gas pump for people who drive, and so at $2 billion extra dollars a day for the oil bill of the world, do the math. That's 14 billion barrels a week. That's 60 billion barrels or $60 billion a month.
Right, and we have the U.S. with shaky economic recovery, and Europe just barely out of a recession.
Yeah, isn't that something? Yeah, Europe is just starting to climb out of the pit that it's been in for probably 2 years, and now the price of gasoline, or price of oil, basically goes up 15 or 20% in a matter of a month. I mean, this cannot be good for the European recovery. It cannot be good for the North American recovery. If you're in the developing world, where the developing world has its own problems, pick a country, whether it's Turkey, whether it's Brazil, whether it's Southeast Asia. I mean, heck, even if it's China. I mean, China, we have this image of them as an industrial powerhouse, economic powerhouse, fast-growing economy. Well, however fast they're growing and however well they're doing, they're going to do less well and they're going to grow slower. When the price of their oil goes up, 15% in a month. So no, this cannot be good for for the economic health of the whole world.
Well, let's hope if folks were planning a driving holiday, they've got it under their belt already.
Well, fill your tank while you can, but don't be surprised if in the U.S., let's say the $4 gallon of gas, in the next month becomes a $4.50 gallon of gas or $4.75 gallon of gas, and that's if nothing else bad happens. If other bad things happen, your $110 and $115 barrel of oil could be 120 or 125. I've seen numbers like 150. And if you recall back in 2008, oil went up to $147 in July, and in September the market crashed, and we had a huge recession that we're still living with 5 years later.
Byron, scary times.
Scary times they are.
Okay, thank you very much for talking with us.
Okay, it's good to talk with you.
Coming up, Richard Knowles on This Week in Money.
Always consult your investment professional before making any investment decision. More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. This Week in Money is archived online at TalkDigitalNetwork.com.
My guest is Richard Knowles of Knowles & Associates in Vancouver. He's a personal and corporate financial planner. Welcome to the show, Richard.
Hi, Jim. How are you today?
I'm doing great. Two things we want to talk about. A new kind of mathematical formula to try to guess what the markets could and should be doing. And also, of course, the crisis in Syria and what that might do to the markets, both short-term and long-term. Well, let's talk about this interesting mathematical formula that could calculate where the markets could or should or might be. What is it, Richard? And maybe explain. I'll get my calculator out.
I hate getting too numerical.
Yeah.
But in any case, it's basically there's a new calculation method being used that's been created by a Yale University professor by the name of Robert Shiller. And what he did was he's managed to monitor and go back and back test his ratio. It's called the cyclically adjusted price of earnings ratio, or CAPE, as we want to call it. I don't know that it's not a standard in our industry. It is being touted as a new ratio, which may have great value. But basically, according to the CAPE ratio, stocks in the S&P 500 that have been measured using this ratio going backwards in time to see if it's valid, see if it works, actually shows at 23.6. It's the number that they've used to calculate this ratio, whether the price to earnings ratio, in other words, the price that the current stock is based on the earnings that it's producing. So they've calculated a number called 23.6, measured at 23.6. Whereas the long-term average, using the same ratio and same numbers and same calculations, for the S&P 500 has been 16.5. Now, what does that really tell us? It means that today's stock prices, compared to the average price-to-earnings ratio of companies in the Standard & Poor's 500 index and stocks in the United States, is above its normal sort of average. Now, does that concern anyone? Well, not necessarily. I mean, as I've been saying, without the numbers, we already knew that stocks were overvalued. Why? Because the economy that supports the very companies that have these valuations, the economy has to be growing at the same growth pace to be able to support these stocks, the very companies, and to be able to produce the economy and the buying power of all these companies to be profitable. So while a stock can be traded up on the stock market because people think it's going to go up, I mean, after all, there were many people buying Brex even though there was nothing in it. The whole reality is, at the end of the day, the production of the company has to be measured, and people will sell that stock off if indeed the company does not continue to make earnings to meet the new price targets that people seem to feel are valid to pay. So if for many of your listeners may want to go out and think about buying instead of a stock, they're going to go buy a car. And they believe that it's worth paying more for an electric car because they're going to save more on gas. But what if they found out when they bought the electric car that it costs more to run it or as much to run it as a gas car? Well, the price would go down. People wouldn't buy it. And it's pure supply demand. So it's the same kind of thing with stocks. while it has great value, just as your electric car would have great value no matter what, its value at the time you bought it will be a loss if you try and sell it today. So what you really, good value-oriented buying of stocks or of anything really, is to look at the value of what you're paying at that time. None of your listeners, and I don't believe anyone, should be buying stocks unless they really fundamentally understand what it is they're buying and why they're buying it at that particular time and at that particular price. That will give you the best opportunity to buy at a low price. You know, say somebody's selling it off because they don't understand it, but you're buying, say, a bank stock or something at a very good value, a low price. You know it's not going out of business. But if you can get it at a low swing in the market, then you know that you're going to have growth over time. And that's called value buying. So you look at very fundamental things when you want to buy for value.
And what are those fundamentals?
Oh, everything from the basic fundamentals of a company include just like looking at the books of any company. You know, you're going to have cash flow. You're going to have a certain amount of debt that the company is going to carry. You're going to have earnings, obviously. And the product itself, you want to see if there's a lot of competition for that product. So if everybody's got one and everybody makes a better, widget, why do you want to buy this company versus the other 100 companies that make this widget? So once you understand each company and what industry it's in, what product it's selling or service potentially, and if it has a unique characteristic, and you know that the earnings are very good and indeed are projected to continue to be good, then that's a good time to buy that stock. So these are basic fundamental ratios we have in our industry. Price to earnings, that's a very classic one. Book value and to cash flow, these are other ones that we use. And this is a way that research analysts look at, and many mutual funds, of course, are all using research analysts to study each individual stock that they buy. They don't just go out and shoot a dart at a dartboard. So we take a long time to do the analysis. We find out which companies we want, and really, if our mutual fund is performing or our portfolio is performing better than someone else's, it's just based on the better research.
Can we expect a major market correction?
Well, at this point, we're looking at a market correction because we have the markets are coming off, not because of necessarily overvaluation, although that is part and parcel of the picture, certainly in the States, not so much in Canada. We're well valued in Canada, I believe, in many ways. But there is a war striking up in the world. There's a big global calamity in Syria. And whenever these things happen, here's the typical cycle. You get an initial sell-off. The sell-off is based on a knee-jerk reaction by a certain number of investors that will just flood the market with their stocks because they believe that the stock market, they want to get out, take their profits. If there's any negative news, the negative Nellies will sell. So this is a short-term usual fluctuation. But unfortunately, or fortunately, depending on which side of the fence you want to argue, war is good for an economy. It's a terrible thing to say, but it is a reality that isn't the same nonetheless, whether you want to deny it or not. Wars help economies grow, and this is probably one of the biggest travesties of why we go to war. Many countries, including the United States, and not so much Canada, of course, but we're not a warmongering nation. But there are a number of warmongering nations in the world, so to speak, ones that will actively go to war very quickly, and of course the United States comes to mind immediately, Britain and others, typically not because of the defense of their shores, but because of a defense of an ideal somewhere else that they're willing to put their troops to death for. This is one of the greatest travesties in a philosophy, depending on which side of the fence you sit on. Going to war for business has been a famous or infamous reason to go to war. The oil calamities, right through the 1930s, World War I, post-war occupations of the United States and other countries were really for, admittedly by their own military, were for sugar interests or Standard Oil that had to get into China in the 1930s. I mean, they actually went to occupy these countries for the purposes of the corporations to move in there and position themselves. It's a type of hegemony, and it's been going on a long, long time.
Well, sure. William Hearst was famous for starting the Spanish-American War by ramping up the rhetoric because he knew he would sell a lot more newspapers if people were concerned about a war.
Yeah. I'm not talking about wars where people are on your shores and you have to defend yourself.
Well, sure, that one was fought in Cuba.
Cuba, we have many examples. General Smedley Butler in the 1930s, the head of the armed forces of the United States, was the most outspoken critic against the corporations controlling the military to go into other countries for the purposes of developing corporate elitism. So, I mean, it's known. I mean, you just have to do the history. I'm not saying that every war is like that, But we do have to be cognizant of the fact that whenever a war is generated, for legitimate purposes or not, whatever, whenever a war occurs, the ultimate result is usually an increase in economic activity and therefore a benefit to many of the countries that do go to war.
What can we see happening with Syria? Will, if they do launch cruise missiles and attack certain military assets in Syria, will that necessarily upset the markets enough to really cause chaos?
No, I don't believe that there will be. Well, it depends on there's a number of net results that could happen. I mean, if suddenly, somebody came to Syria's aid and said, stop doing this, said Russian nuclear armament started to defend Syria's actions, saying that the U.S. and the, free world has no right to come in here, as they have in the past, when they were more of a Soviet nation in the Soviet bloc. Yeah, sure. I mean, that could escalate to another Cold War, could nuclear strikes. I mean, who knows where it could go? I mean, any war is not a good thing, really, for the big picture. However, at the end of the day, with this isolated incident, it seems to be a concerted effort, I should say, by the rest of the industrialized nations to prevent this from occurring because they're against chemical wars. They weren't going in when there was this insurgent and everybody was shooting themselves with bullets. They only got upset because of the fact that there's chemicals being used, and chemical usage has been banned worldwide. And so the police force of the world, Britain, U.S., the industrialized nations, are going in saying, look, the rules are this, and we're enforcing those rules. But this has to be approved by a UN-sanctioned council. They can't just go in on their own because they've done that many times. The U.S.
And Syria never signed that international agreement not to use chemical weapons.
That's true.
So they have a little technical out there. Well, we never agreed to that, so what we're doing is perfectly fine.
Perfectly. Yeah, very good point, Jim.
Yeah. And of course, without the UN Security Council saying yes to it, this could end up being a NATO affair like Afghanistan was.
Yeah, and also if the U.S. Obama has to go through approval by the House, and he can't, or the Congress, I believe it is. I can't remember where he has to get approval. But if he goes and just willingly goes to war, which a president can do only in the sense if you're being attacked. So if you can go to immediate war if you're being attacked and you don't have to get an approval. But when in this kind of choice situation where you have to go through their regular protocols, and so that's a very big threat, and it's it's something that everybody has to take under strong consideration. Same in Britain. They've actually, from what I heard today on the BBC, apparently Britain wants to, or the head of the British Parliament, the Prime Minister, wants to bypass doing the straight protocols of getting approval and go straight to war, which probably in support of the U.S., I imagine, as they typically do. But this is very unusual for the British to do. They shouldn't do that unless, of course, it's like World War II, where Germany is literally coming over on their shores, and they have to go to war. So.
Yes, and of course, the U.S. president uses executive orders every day to order predator strikes against suspected terrorists, and he could use the same kind of executive privilege here, too, saying, well, this isn't an act of war. This is more of a police action, an executive action.
Yeah, but a police action is different, I believe, and I think it has to be reviewed by the UN Council and also approved because really the armed muscle, the police force of the world is the United States. It's pretty much established, and they've got the muscle right now to be able to enforce things. But they are still supposed to be following international laws, which are held by the UN tribunals. So unless they've ordered them to go in, they're not supposed to do it. So at least on these kinds of international actions, as long as it's not a direct threat to the United States. However, the United States has had a great history of overriding UN Council decisions simply because they are the muscle and might makes right, obviously, in this world. I mean, I'd like to believe otherwise, but the truth is that is how it is.
Sure, and the Geneva Convention
makes all the rules.
Yeah, and the Geneva Convention that everybody mentions, the U.S. never signed it. It initialed it. And that's been their excuse for not being exposed to war crime charges and so on, because they can say technically Congress never voted on it, so it's not in effect either. Mm-hmm. Although whenever their prisoners are abused, they cite the Geneva Convention all the time.
Mm-hmm.
Yeah,
true.
So they've kind of we're kind of half in, half out, depending on what's convenient for us. If you're investing in the markets, is there a safe place to be if things go sideways?
Yeah, cash right now. I've been sitting on the sidelines with cash, and everybody was kind of snubbing their nose at my advice, for months now. And I'm saying, listen, we're overpriced. If you've got cash, sit in cash. There's been some small cap global moves that on the upside. There's been great run. We've had a great run on dividend stocks in the U.S. and Canada. And I've been saying, hang on to that because you're getting paid to wait because money, it's called the flight of money. When there's a big question in the world, the flight of money goes to security. Recently we've been having bonds trading down because interest rate threats are going up, so bonds have been losing value. However, now suddenly bonds are holding value. They're popping up a little bit because their demand is so high. People are getting out of stocks, wanting to position someplace safe until they can figure out what's going on. That's part of it. And also, if you're sitting in cash, if you've been selling, or if I'm not saying to sell everything you have, go to cash. But those that have been in cash, wait a little longer. There's going to be buying opportunities. Now remember, problems are problems, but problems provide opportunities. That's the way we should be looking at the big picture. So we're not involved in this problem. We might have to do a little bit of policing. We're really not a military presence. What's going on in Syria, we want to be politically correct because we have a lot of...
I always joke, Canada will send the plane and the ship.
Yeah, I mean, we might do the peacekeeping afterwards if it's appropriate. But we typically don't go in on the major military action, although that has been increasing more and more with pressure. But we don't have the forces. We're certainly 1/10 of the population of the United States. We have less than 1/10 of the military might and the money to put behind it. That's reality. But at this point, we're more diplomats. We can say what we can say, and we've always been respected on a diplomacy around the world. However, our say in the decisions are very little. That's reality. At the end of the day, we'll position ourselves politically. Our politicians will want to look good. They always want to be in the G7 or G8. They want to always have their say and make it look good that we have international control, but we have limited. At least we're respected to the point that they'll listen. But actually getting it done is another matter. The second thing that will likely happen is that we'll have an opportunity to get into the markets. So as investors in Canada, we're in a very secure position. We're outside of the conflict. We feel for them, but we're outside of the conflict. But we can see what the rest of the world will do as as the correction occurs. This is typically what happens initially. The fear enters the market. People don't know what's going on, the unknown really. So people sell because we've been having a large run on profits. We've been running up. We all know there's really no stability in the economies of the world to hold up much of the high markets. So there will be a minor sell-off. Not a major. No, it's not going to be a wipeout like 2008. But there will be a sell-off to the point where those that have been waiting to get back in to buy good quality names, long-term growth potential, excellent value to be buying coming up. I believe probably by the end of September into October, we're going to be seeing some of the best valuations we've seen in a long time as an opportunity to get back into the market. For those investors that don't have guarantees on their investments, either through segregated funds, which are guaranteed mutual funds, or insured mutual funds, so to speak, or in some sort of lifetime income program where they've got guaranteed returns, even though they're in the investments of stocks, you can have guaranteed annual returns minimum, plus a lifetime guarantee of income no matter what happens to your money. Those people have less of a concern, no real concern. You might want to try and get the best you can out of this by taking advantage. But really, a well-diversified portfolio should already be positioned. And if you've already had cash waiting, which a diversified portfolio likely would have a certain amount, many of your mutual funds, if you own them, these investment managers already have been positioning with good amounts of cash, if they're good funds, and I can show you some of those if you need to know. But the idea is that they would have cash ready to buy. So you will see volatility in your investments if you're in stocks. But don't be too worried. As long as you've allocated it to the right management, they'll be doing just as I've told you because we anticipate these things. If I can certainly see it, many of the fund managers have been able to. And I've been in conferences with them, and we've talked about these things.
Richard, is there a way for people to get in contact with you if they have questions about some of the things you've talked about today?
Certainly. You can contact me on my email at richardk@customplanfinancial.com or richknowles@hotmail.com, whichever you prefer, and I'll be able to respond to any questions that you send.
Thank you very much for chatting with us.
Thank you. Thank you, Jim.
After the break, David Smith on This Week in Money.
Always consult your investment professional before making any investment decision. The best of the best. Randy Elvis Frisky and his Las Vegas show band with Cassandra Frisky. September 14th at the Sagebrush Theater. Tickets at Kamloops Live box office. Call 374-LIVE. Details at randyelvisfrisky.com. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. David, we're looking at the crisis in Syria, the possibility of military action, and usually that causes panic amongst people. Have you seen any big changes in the gold market because of this crisis?
I think early in the week when it looked like they were actually going to do something yesterday, that there was a certain amount of safe harbor buying, but then the metal started selling off on Tuesday and kind of into that Friday here on the down note. And we're getting the type of reaction that you'd expect after this really big run-up of a couple $100 in gold and over $6 in silver.
I hear that generals and their families are fleeing Syria and going into Lebanon. Are they taking stacks and stacks of gold with them?
It's hard to say, but you know, when the Libyan government was under attack, it turned out that Gaddafi was financing his efforts to stay in power with gold. So gold is always the insurance of last resort, whether for honest people or tyrants.
Do you think that people have been looking at this for quite some time and have perhaps already made their gold purchases?
It's possible, but I think people should be more interested in the intermediate and longer term basis for gold and silver rather than trying to play the Syrian card, because however that turns out, if we go to war tomorrow or if it's next week or not at all, the bull market isn't going to be dependent upon Syria to remain intact and move higher, because the supply demand and the systemic issues that have been with us for a number of years are still here, and Syria is just one more nail in the coffin should it occur and become a problem that spirals out of control.
It seems we're almost used to the crisis mode being in condition red or orange and a half, whatever. I mean, North Korea with their talk of using missiles and more nuke tests, and then all of a sudden Egypt erupts, then Syria's civil war becomes even more serious for the rest of the world. Perhaps we're learning that these kinds of conflicts happen, and the possibility of conflict is always there. Maybe we're a little more mature in how we look at gold and what to do with it.
Well, that's maybe part of it, but also the transmission of news is instantaneous now, often in real time. And so the market is able to adjust its expectations and its perception of what's going on more quickly. And that's why I think that people should consider, if they're going to be investing and buying and selling this mining stocks and things like this, they should be looking at those unique fundamentals. And if they get an event that pushes the markets in a certain direction that happens to benefit them, so much the better. But to try to plan on that and say, well, should I buy gold? They're going to attack Syria, and if they don't, I won't buy gold. I think they're missing the boat, because gold is going to move to its own tune regardless of what happens in Syria.
The European market slowed down a bit. Is this a reaction to the world crisis where maybe they can't move their goods, especially if they're selling to the Middle East?
It's really hard to say, but of course, because so much oil comes out of the Middle East, it puts a firm bid under the price of oil, which I think today closed around $107 a barrel. It's been as high as $111 for a while a couple of days ago. So again, that's that premium that's put in there in case there's some disruption with the Suez Canal or something like that. So these things are going on, but I think if we look at the wider picture of what's going on with the metals, for example, we are overdue for a retracement after the last several weeks of run-up, and if we get a 50% move back, people should consider, if they haven't bought enough, to be buying in there. Hopefully they sold a little bit earlier in the week, and they can purchase at a lower price. So these are the things, looking at those charts and trying to get the tone of the market, I think is what people who are focused on the metals and the mining shares should be doing, rather than hanging on every utterance. The politicians, many of the information pieces they put out there are meant to dissemble and to confuse their opponents. And so we can't know that what we're seeing is what's really going on. And if we invest on things that are half-truths or untruths, then our investing results might not be too spectacular.
Byron King, earlier in the show, mentioned he thought somebody is trying to cause trouble and misinformation in the Middle East. He's not sure who's doing it or why they're doing it. But he doesn't think it's the gold people or the oil people. It's somebody else with some kind of motive.
No, these are politicians, whether it's the Americans or the Russians or the French or whatever. And the reality is that you just can't pay attention to that. And nobody's paying attention to what people are saying in the gold and silver markets in relation to moving the situations in Syria. Those are operating in their own separate worlds, really.
More with David Smith next on This Week in Money.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back, David. A question I have, India said it had its biggest downturn in their economy in 4 years, and we know how traditional gold and silver are to the Indian populace, where so many people actually wear their wealth as jewelry, and they're untouchable. Nobody goes and robs them. Everybody does it. What has that had as an effect on the markets when it comes to precious metals?
A few weeks ago, the Indian government decided to clamp down on the importation of gold and tax silver heavily because the rupee, as you mentioned, has been falling in value and their economy has been stagnating. And I guess the feeling is on the part of the Indian government that people are putting too much money in precious metals. And they have a good reason to be doing it, because beyond the idea of collecting this for weddings and this sort of thing, and Eric Sprott did an excellent article on this just a few days ago, mentioning that the gold in U.S. dollar terms in relationship to the rupee hit $1,800 an ounce because of the fall of the value of the rupee. And so this, what it's done is to drive gold and silver purchases underground, and there's a lot of evidence that much off-the-radar gold and silver is coming into the country because people want it even more when it's forbidden by the government. So instead of dealing with the systemic issues from the standpoint of governance, they're trying to arbitrarily deal with it by forbidding people to buy gold and silver.
And in India, gold and silver have been the standard for, I would say, 5,000-6,000 years. Pretty hard to start switching now.
That's true, and they'll be the standard for the next 5,000 or 6,000 because the governments continue to make the same type of mistakes that they've always made.
What do they have to do in India to get their economy going, or is it a very complex issue and something we probably wouldn't get?
Well, if they cut down on governmental regulation and cut back a little on corruption, that could go a long ways. Enable business people to start up businesses more easily and not tax them so heavily, and get people to spend the money in a way, a capitalistic type of way would be very helpful.
Well, when people wonder why do we call bureaucracy red tape, it was invented in India, where they presented petitions to the various sultans in documents wrapped in red tape.
I didn't know that, Jim, but that's very fascinating, and it just proves once more just how entertaining and fascinating true history can be.
With all these different factors playing in the market, then it's still good then to do your research before you get into the gold market and find out, if you're getting to mining stocks especially, that the company, even though their shares may have dropped a lot, is still healthy.
Right. You want to make decisions based upon knowledge and make informed decisions. One thing that I think is interesting, and I'll be looking forward to over the next week or two, is watching to see if some of my favorites come down to the 50-day moving average and get into that area, which is where they should uncover buying. And if so, I would like to do some more buying down in that area. So usually these reactions in a strong uptrend take about 2 weeks to work themselves out, and then they move on again on the upside. And so my guess is that we have another week of sideways to lower prices before some strong buying comes in and starts moving these things up again, possibly to new intermediate-term highs. We'll just have to wait and see.
I know markets typically over the summer have low volumes, and sometimes it's hard to guess what their direction might be because of that. Is that the same thing when it comes to precious metals?
It is in a sense, but we're pretty much through the summer now, and the volumes have really been picking up. And when we saw this turnaround the last week or so in many of the mining shares, the volume was very, very large in relationship to their normal volume shares traded. So I think a lot of interest in new money and new participation is coming back into the market.
David, always fascinating to chat with you. I think we are going to see some interesting moves in the precious metals, whether we like to see that or not. But I think for people trading in it, at least people are interested again, and that's probably good news.
That's true. We want more interest in the market and more money coming into the market. I think it's going to be very fascinating. And I've really enjoyed speaking with you today, Jim. You have a great Labor Day weekend.
You too. My guest has been David Smith, the senior analyst for the Morgan Report. I'd like to thank David and the rest of our guests, Byron King and Richard Knowles, for being here on This Week in Money. And thank you for listening. I'm Jim Goddard for Phil Mackesy. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.